Okay, so good morning, everyone. I hope you're all doing well. So today we're going to do the 2020 exam paper. I see the one that I have is slightly different to the one that's on the library. So what I'll do is I'm still busy working through the one on the library, and I'll make that available to you guys as well so that you can see. I saw that one was a bit more theory-based, more memos that you had to write, so it was a longer bit of a piece of paper, where this one was more calculation-based. Okay, so what we're going to do is we're going to go, Kiara, the paper that's on the library is another one. So what I'll do is I'm going to put it on the screen, but if you want, I can email it to you after or in the break. I can quickly email you a copy of this one if you want. Okay, and then once we're done after class, I will make available the suggested solution based on what I've worked out, and I've indicated more or less what the mark allocation would look like for a paper like this. So we're going to do it per question. If you've got any questions, please just either put on your mic or type in the chat box, and then I'll answer it. So we're going to go through each and every question, and then there's different things that you need to see. So as we go through it and there's something that is unclear or that you're wondering about, please stop me so I can clarify, and then we can continue. Okay, so let's start with question one. So from the paper, past papers, they do include a multiple choice type question. This is where they are testing generally your learning units 1, learning unit 3, and then portions of learning unit 4 and 5. So this is where we can basically test, do you understand the concepts of what is gross income, what is income, what is deductions, taxable income. So we are actually testing, do you understand the tax framework? As well as do you know what is happening in practice as well as in the world outside of class. So you'll see some of the questions that they've included is also relevant to who is currently, for example, the commissioner of SARS, who is, they might even ask who's the Minister of Finance. So those things you just need to be aware of. It does count 2 marks, and if you don't know it, you can guess. But most of it is actually based more on Learning Unit 1, Learning Unit 3. And then some of it is Learning Unit 4 and 5. Okay, so let's go through the question and see what do you have to see in order to do this. So question 1 is they tell you multiple choice questions, select one correct answer. So there's only one correct answer. So what that means is if you have 5 options, you can only select one. So you only write down one letter in the question paper. Now, multiple choice is generally where people spend too much time in an exam, so you need to make sure that you time yourself. This is 30 marks, so you should finish it in 30 minutes. Okay, some of the questions might take a little bit longer because of the amount of calculations you need to do, and then other ones will go quicker, but generally they will even out. So what I suggest is when you get a multiple choice like this, is do the ones that you can, and if there's ones that you are stuck with, select one of the 5 letters and then mark it on your paper to go back if you have time. Okay, don't spend too much time on it because you will be losing marks that you could potentially get later on. Now in this question, they gave you some information, and then they tell you that questions 1.1 and 1.5 is based on the above information. So if we look through the information, Coolcut Proprietary Limited is a South African company that sells handmade crockery and ornaments. The company is registered as a small business corporation. So that is important. It's a small business corporation, which means they have their own tax tables. Okay, so I'm just going to write here SBC tax tables is what you need to look at. Now those tables are at the end of the paper, so we are going to use those ones if we need to work out the normal tax or the tax liability. And then they tell you our year end is ended 31st of January 2020. So that means our tax period would have run from 1 Feb 2019 up to 31st of Jan 2020. Then they give us information, your revenue, dividends received, rental received, lease premiums received, deductible expenses, taxable capital gain, provisional tax paid. Now, as soon as you see amounts like this, stuff that they are most likely going to test is what is your gross income, what is your income amount, what is your taxable income, and the tax amount. So they are testing your tax framework if they give you information like this. Okay, so let's go through questions 1.1 to 1.5. So they ask you to calculate the gross income for Cool Cat Propriety Limited. Now remember, gross income is all your income that has accrued or have been received in your tax period, but it excludes amount of a capital nature. Now, based on the information they have given to you here, how you would work this out. We would include the revenue, which is at 2.6 million. You will include the dividends as well, even though the dividends are exempt. And you need to include it in gross income. And then if we work out the income amount, we will take it out again. Then your rental received and your lease premium are specific inclusions. So you add those as well. And then if you add all of those together, you should get to an amount of 352,000, so 3.5 million. Now, based on that, you will see the answer is number 2, based on that calculation. Now, what I want you to do in a test is as you do the calculations, then you continue doing the following step, because you'll see the questions follow on one another. So the next one, they ask you to work out the income. Now remember, income is our gross income less exempt income or exemptions. So my starting point would be I'm taking what I've worked out in the previous question, and then I would deduct anything that is exempt. Now, if we go back to the information they provided to us, we know that dividends received are exempt from tax because normally the dividend withholding tax would have already been taken out before it got paid to a company. And then based on the other revenue sources, we do not have government grants, we do not have foreign dividends, which will have a partial exemption. So we will only deduct that 63,000. And if you take that off, you should get to an amount of 489,000. Okay, so 3.4,890,000, and that is number 4. Okay, so you see how you have to work the steps. And if you don't know what the different contexts are, okay, let me just write here, this is income, just for your reference. Okay, so here you can see if you don't know the terminology, you would actually struggle to do these questions. Now, based on this paper, as well as the other version that I saw in the library and the 2019 paper, they've actually asked this in 3 papers already. So you can assume to see something similar to this. So make sure you know what is gross income, how to calculate it, how to calculate income, how to do taxable income. Okay, so the next thing they ask you is now to work out the taxable income. Now remember, the next step for taxable income is we take the amount that we have done for income, we less the deduction, so we deduct deductions, but then we also have to add back the taxable capital gain, if there's anything, and that would give us our taxable income amount. Okay, so that's why I said you do the calculations based on your amounts that you've calculated as you go. So we're going to start with 3.4,889,000. So that's where we're starting. Okay, now let's go see what deductions have they given in the information. So the first deduction is deductible expenses of 1.3,066,000, and then we've got a taxable capital gain of 72,900. You'll see there's a provisional tax payment. That amount is not included when we work out the taxable income. That amount is only applicable when we do the tax liability. Okay, so they put it in there to see if you know where it's supposed to go. So let's go do the calculation and see what the potential answer could be. Okay, so we deduct the 1,366,000, which is our deductions, and then we add the 72,900, which is our taxable capital gain. And if you add all of that together, you should get to an answer of 2,195,900 Rand. Okay, so if we look at the options, that would be option 5, would be the answer. Now, what they've done in the next portion is they say this is for question 1.4 and 1.5. Assume that the taxable income amount is 3.1,065,000. Now, the reason they do this is if you made a mistake in question 1, 2, and 3, for example, then you will get a completely different tax rate for your normal tax or your tax liability. So what they're doing is they're trying to not disadvantage you, but give you an opportunity, if you know how to apply the tax tables correctly, to still get these marks. Otherwise, you potentially lose 10 marks at the end of the day. Okay, now remember, normal tax is our taxable income multiplied with the applicable tax rate. Now, we said because we are a small business corporation, we are going to apply the small business corporation tax tables. So I'm quickly going to scroll to where they've included this for you. So it's right at the end of the paper. Okay, so in your exam paper, they will provide you with an annexure with any applicable tax tables. The only ones they will not give you is if it's a flat rate of 28%, they will not indicate that you need to know. But if there's a sliding scale that is applicable, they will provide it. So they've given you the tax table for a small business corporation as well as a micro business. Now, the one you need to use is the small business corporation. Now, the value they have given to you is they said our taxable income is, let's just write here, taxable income was 3,165,000 that we need to apply. Now, how you have to apply this tax table is you start here on the left-hand side with your taxable income. Now, I go look, where does my amount fit in? Now, based on the table and the amount of taxable income, you will all agree it is actually above 550,000. So that means I'm here at the last line of that tax table. Then on the right-hand side, they explain to you how to work out the tax amount. So the 58,870 is the tax on an amount up to 550. And then we apply 28% for the amount above 550. So your 3.165 million less your 550 will then give you the tax value. So let's quickly just, while we're on the screen, then tell you how to work out the normal tax. Okay, so our normal tax would be 58,870. So that's the first amount. Then you plus it, you take the 28%, then you multiply that. That's what the of taxable income means. So you multiply it, then we take the 3.165 million and we deduct the 550 to get to the amount above the 550. And that is how you calculate the normal tax. And that should give you an amount, if you go work it out, of 791,070. I'm just going to scroll up again. I'll put the calculation with the question again. Okay, so that means this is how you do your calculation. Now, if we look at the table, that means number 3 is the correct answer. Okay, if you run out of time, a little tip on how to do this. If you run out of time, we know 28% is the maximum you would pay if you're a company. And we know they're already on the 28%. So then you go work out what it is if you paid a full 28%, and then it's generally just slightly less than that. Okay, so it's not the very small amount. Your 28% would generally be about, yeah, the 886. So that will give you a better indication if you have to guess which one it is. If you're running out of time, you do it that way. But please, if you have time, just do the calculations and you'll get to the answer. If you don't get to an answer on there, then you've made a mistake. So what they've done is the answers here, they have not done it the way I like to do it. So I generally give you options with mistakes. So because I know where students go wrong, so I normally include those answers. So you will find an answer if I've set the paper, but in this one, they've only given you either the 28% or the one that's applicable using the sliding scale. And then they've given you some random amounts. Yes.
For a question like this, since it's with 2 months, can we still include the calculations as well?
Okay, so I've got a question here in class. They ask if for a question like this, do you still include the calculations as well? So for a multiple choice type question, you only have to indicate the letter. You do not have to show the calculations. The calculations you will do on your paper, like I did. So you write on your paper, you would do these notes for yourself to work out what the answer is. Because unfortunately, a lot of us can't do these type of math sums in our head. So you have to write it down just to make sure you get to the answer. But you only have to give like number 1, 2, 3, 4, 5 is what is required. Okay, then the tax liability. Now remember, our tax liability is your normal tax amount less any prepaid taxes. Now for a company, that will be your provisional tax. And if they've got any foreign tax, it would be that as well. Now, in your module, they don't discuss foreign taxes. So in your scenario, it would only be the provisional tax. So what we do now is we take the 79170, which we've calculated in question 1.4. But now we need the provisional tax amounts. So now we have to go back to the original information they've given to you. So they've only given you a taxable income amount to do the normal tax rate, but you still need to use the provisional tax paid amount given in the original information. So don't forget about it, which is this 449 Rand. Okay, so we deduct the 449 Rand, 1,000 from this amount, and then you should get to a tax liability of 342,070 Rand. And if we look at the options, that would be option number 4 would be the answer for your tax liability. Okay, so that is where they've tested your taxable income. So you can, or your tax framework. So you see, if you don't understand the tax framework, it is 10 marks that you are throwing away. 10 marks for a lot of you is the difference between the pass and the fail. Generally, multiple choice is where students lose a lot of their marks. The average for a multiple choice question on average is about 40% is what people score, because of the fact that they make little mistakes. And if you've made a mistake, we don't give method marks for mistakes in multiple choice. So that is, you need to focus when you do this type of question. Okay, so let's see what other questions that they ask. They tell you the directors of Bravado Limited wish to register for tax. What form must be completed and submitted to SARS in order to register the company as a taxpayer? Now, this question they are asking, what form do you complete if we want to register as a taxpayer for the first time? It is not for VAT. It is not for income tax. It is a taxpayer. So that is, you need to read very carefully what they've asked you because there are different forms. So in this scenario, the form that you would fill in is the IT77C. Your ITA 34 is your assessment. So that's once you've submitted your income tax return, that is the calculation that SARS gives you to show you how they've calculated your tax amount. Your IT12 is an income tax return for an individual. ITR 14 is for a company, and your IRP 5 is an employee tax certificate. Okay, so that is basically where for an employee we show what tax have been deducted. They could potentially, based on your module, ask you the ITR 14 as well or the ITR 12. You need to just know what these tax numbers stand for. Okay, let me quickly write it in here for you, then you know. So this is the assessment. This is income tax return on individual. Income tax return for a company. And this is freeze tax for an individual. Okay, so those are what the different forms are. So please just know specifically the ITR ones is what they would potentially ask if they do not ask you to register as a company. Okay, then question 1.7, they tell you Claudia has a 31st March year end. Now, as soon as they give you a year end, you need to know that there's a reason why they give it to you. When must the first provisional payment be made for the 2020 year of assessment? Okay, so when they say 2020 year of assessment, that means our year end ends 31st of March 2020. That's what it means. Okay, now a year is 12 months, so our year would have started 1 April 2019. Okay, so the month after March, but for the previous year. Those are 12 months. Now remember, the first provisional tax payment is after, or the first 6 months, let's just say first 6 months of our tax period. Now, if our tax period starts 1 April, that would mean 6 months after that, so you count it. You say April, May, June, July, August, September. So 6 months after year end is 30 September. But now you see they've got two options there. They've got a 2019 and 2020. So now we're testing, do you know that the tax period starts in the beginning of the tax period for the first 6 months? So our first 6 months would end 30 September 2019. Alternatively, if you don't want to count 6 months from the beginning, you can go from 31st of March, you can go back 6 months and you will get to the same answer. So in this scenario, our answer is 30 September 2019. Okay, and they tell the last option where they say it's not applicable, closed corporations do not have to pay provisional tax. That is incorrect. A closed corporation, just like a company, has to register for provisional tax. So they will pay it, but what could potentially be is if they've got a tax loss, they would pay R0 provisional tax. Okay, but the statement there at the end is incorrect. Question 1.8. Which statement is incorrect? So now they want to know of the statements here at the bottom, which one is incorrect? So normally if we ask you for something incorrect, it will be very close to the actual answer, but there will be some wording changes. Now this is where a lot of students struggle, especially if you don't have first language English, which most of us don't. So you need to read carefully. So what I normally do is I go through each of the items and then I start ticking off what do I know is correct and sort of eliminate the things. So the first one, they tell you the taxpayer has 30 days after receiving the assessment to submit an objection. Now, in terms of the thing, have to submit it within 30 days, not after 30 days. So that's why this one is actually incorrect. Let's quickly read the other ones just to show you what they say. The outstanding taxes must still be paid even though the taxpayer is disputing the assessment. That is actually correct. Should the objection not be successful, the next step is for the taxpayer to take SARS to the Supreme Court. Now that depends on the value, but that is also correct, as well as where you are in the process. The burden of proof rests with the taxpayer. That is also correct. So your taxpayer has to prove that what they are disputing is correct. And if you've got an objection, you lodge it on an NOO form, which is a notice of objection form. So that is also correct. So that is the alternative way you could have done it to get to the answer if you were not sure. Okay, so in this scenario, it is 1 because it states within 30 days. Okay. Which one of the following statements is not one of the objective factors? So this is also a negative one. So which one is not correct? Okay, so read very carefully whether they ask you for the correct one or incorrect one. Okay, that have been considered by the courts to determine a taxpayer intention for the receipts of a capital nature. Now, this information you will have to go study. This was on page 39 to 40 on your workbooks. Okay, so this is where you would have gotten the answer. So the options are the amount of the transaction, the nature of the asset disposed of, the legal nature of the taxpayer, the manner of the disposal, and the accounting treatment. Okay, now if you go read that list, the only thing they do not mention on that list is the amount of the transaction. So when we look at whether something is capital and we follow the objective factors, we don't actually look at the amount. We look more at what type of asset is disposed of, how is it disposed of, how do we account for it for accounting purposes normally, and then as well as the legal nature of the taxpayer. So what does the taxpayer do will also give you an indication as to whether it's a capital or a revenue type asset. Then question 1.10, which statement is incorrect? So here you also have to do the incorrect statement. Okay, so the first one is small business corporations qualifies for accelerated capital allowances. That is actually correct. So their allowances are generally much more favorable. A company pays tax at a fixed rate, a proportional tax. That is also correct. They pay 28%. An individual is taxed on a sliding scale, so progressive tax. That is also correct. So we've got a tax table for your individuals. A micro business pays tax on taxable income. This is, however, incorrect. Micro businesses pay tax on qualifying turnover. Now, let's say you weren't sure what does a micro business actually pay tax on. Let's quickly show you where you could have seen this answer in your paper. If you scroll to the annexures, they've actually given you the tax table for a micro business. And here they tell you it's taxable turnover. Okay, so even if you could not remember what a micro business is taxed on, this is where you find the information in your exam paper. They've actually given you the answer. Okay, so let's just quickly scroll back to 1.10. Okay, so that means number 4 is your answer because of the fact that they say taxable income. Okay, so that is why that was incorrect. And a small business corporation pays tax on taxable income. That is correct. We do. Then question 1.11. A non-resident will pay tax on. Okay, now remember, non-residents only pay tax on something that is from a South African source, as well as fixed or immovable property located in South Africa, or any permanent fixtures in those immovable properties. So based on that, let's see what information have they given to you. Total income received regardless of where it's from, so that is incorrect, okay, because they are only taxed on a South African source. Income from a source within South Africa, so that is correct. Okay, let's see what other information do they give you. Number 3, all capital assets sold that were located in South Africa. Okay, originally when I read this, and this is what a lot of you would do, you would actually think this is correct because of the fact that they state it's in South Africa. But what a lot of us missed is the fact that they say all capital assets, which is not true. So the Act only says immovable property and fixtures or permanent fixtures located in South Africa. So that is not all your capital assets. Okay, so that is why number 3 is incorrect. And that is why the answer is number 2 and not number 5. Okay, so you see you have to read very carefully in a question like this. Okay, then question 1.12. If a taxpayer is uncertain about why SARS has changed an assessment, when must the taxpayer submit a request for reasons? Okay, so if you are unsure why SARS has done something, you can submit a request of reasons. So when do you have to submit that by? Okay, so within 30 days of lodging an objection, so no, we haven't objected to anything. Within 30 days of lodging an appeal, no, we have not appealed an objection as yet. Within 30 days of receiving the assessment, okay, so normally you would get the assessment and then you would see, okay, but they've changed something and you don't understand why. So that is why number 3 is actually the answer. You would do it directly after you get your assessment. Within 30 days, you would do it. Let's just quickly go through number 4. A taxpayer does not have to request reasons as SARS automatically notifies you. That is incorrect. SARS does not notify you at all. You will have to request it. And then the request for reason is lodged simultaneously with an objection. No, you generally do it before your objection to find out why have they changed something, to see if you agree with it or not before you object. Okay, because when you do objection, you have to include information to support why you object with how they've treated it. Now, you will not know how they've treated it unless you know what have they actually done. Then question 1.3. This is now where we are looking if you know what taxes we are paying in South Africa. So which tax is not levied in South Africa? Okay, so dividends tax. Yes, we've got dividends tax in South Africa. That is why dividends are exempt for income tax purposes. Excise duty, that is when you have a deceased estate, you pay that on that. Transfer duties, when you buy a property and it's over 900,000, you would pay transfer duty on it. Donations tax, yes. If I make donations in my personal capacity of more than 100,000 in a year as an individual, I would pay 20% tax. Companies pay donations tax irrespective of the value. So that means entertainment tax is the one that is incorrect. Okay, we do not have something like entertainment tax in South Africa. That is more an American tax. Okay, then they give you more information. So now, based on this, we are going to answer questions 1.14 and 1.15. Okay, so the first thing they tell you, Anthony's Bed and Breakfast generally provides accommodation to tourists in Cape Town. Okay, so we provide accommodation to tourists. He earns an annual turnover of 1.2 million. He charges $850 per day excluding VAT for a room, and an additional 120 excluding VAT for domestic services. During the 2-month period, okay, so we've got a 2-month VAT period, he rented out a room to a tourist, okay, for Canada, who stayed a total of 40 days. Okay, so that's a long-term stay based on that, okay? So let's just say long-term stay. And then he also had a customer, Mr. Scott from Johannesburg, and he stayed for 8 days. Okay, so we had a foreigner and a local. So now based on that, based on the information, they're probably going to ask you something VAT related. And you need to make sure whether the amount is inclusive or exclusive of VAT when you do the calculations. Okay, so let's see, what do they ask you? How will the VAT be calculated for the Canadian tourist? Okay, so you see they've got quite a few options here. So let's quickly go back to the information and then break it down to what information do we need. Okay, so we know firstly they ask $850 per room. So they would have charged him $850 as well as the 120 per day. Okay, so we know it's $850 plus 120 and he stayed for 40 days. Okay, so let's go see what options would that have. Okay, so if you look at how they've worked it out, they said 60%, 60%, 100%. Okay. Okay. So we see they've apportioned different percentages or rates here. Now, for VAT, we don't care if it is a foreigner or a local that we provide the service to when it deals with accommodation and the cleaning, because it happened in South Africa. So we know it's a standard rated supply. So the fact that it's a foreigner or local is not the issue. The issue is it a long-term or short-term stay? Okay. We also know the amounts are exclusive of VAT. So just based on that, we already know that one is incorrect, because we are going to multiply it with 15%. And this one is also incorrect because it's 15 over 115. Now, what the Act says, this is one of the exceptions to the rules, is that if it is a long-term stay, so the person stays for a longer period of time, they actually then only require you to levy 60% of the VAT amount. But for the full service, so not apportioned between cleaning and accommodation. So that means number 2 is also incorrect. So based on the fact that it was a long stay, number 4 would actually be the correct one. Okay. If it was a shortened period, it would have been number 5. Okay, so let me just tell you where you can find this in your textbooks. So if you go to your textbooks on page 68, this is where they discuss this exception to the rule. Okay. Now, based on that, that would mean because Mr. Scott, our local, had a short-term stay, we would then apply 100% as opposed to 60%. So that is why 1.15 is multiplied with 100 as opposed to 60. Okay, so here they're actually testing, do you know the exceptions to the rules? Okay, before we move on to question 2, do you guys have any questions on question 1? The guys online, do you have any questions for question 1?